Hello, and welcome to a capital gains tax video. This is only talking about the United States taxes, so I have, if you live somewhere else, then, talk to somebody, I guess. So, there are two types of taxes for capital gains. There's short-term, which is taxed exactly as the same as your income, and then there's long-term, which is taxed at three different brackets. Short-term is over here for a stock that's held for under 1 year. Long-term is holding it for more than 1 year. But there is an election going on in the United States, and pretty much all of them are trying to change how they're taxed. So this information might be irrelevant when they go, when they become president, and if their bill gets passed or whatnot. But we'll have to wait and see. This is just based on how it is right now, and all this information right here I got directly from the IRS website. I just put it in Excel just to just for it to be easy for everyone. Most people in the United States pay between 25 to 35% in taxes every year. So most of them are in the 15% bracket. Obviously, the people who are rich, like the 1%, pretty much only the 1% is in this bracket, because 1% income is like 500,000 a year or something. So most people in the 1% pay 20%. And if you're in the really low bracket, making under 37,000 a year, you pay nothing on long-term taxes. So that's pretty nice. But let's just, I made this little table right here, so let's just give you some examples. Let's say you're in the 0% tax bracket. Let's say you purchased Coke, okay? And in 1 year, you decide to hold the stock for 1 year. It goes to 55, and you purchase 10 shares, okay? So that's how much you sold it at. You purchased it at, let's say you purchased 10 shares at 42. So your capital gain in 1 year would be $130. I guess we should make all of these in dollars so it's easy for people to understand. This is how much you made. You owe nothing in taxes because you're in a 10% tax bracket, and all that money is yours. So the $130 is all yours. Now let's say you're in the 15% bracket, and instead, let's actually keep it the same. Let's actually change this to make it a little bit more. Yeah, this is still considered in the 0 to 15% tax bracket. So let's say instead of 10, let's make it 50, just to make it the numbers a little bit bigger, and to calculate them on all of the brackets. So let's say this exact same scenario plays out, except this time you are in the 25 to 35% tax bracket, which means that you owe 15% in taxes. So you would do equals 55 times 50, right? Yes. And you purchased it at 42, I believe. Yep. So you would owe $97.50 in taxes. So after all of that, obviously you would be filing this with all of your income, so it wouldn't be just $97, but this is just the tax that you're going to pay on your stocks that you purchased and invested in and then sold. That means after taxes you would have a net gain of $552.50. Now let's say you are in the big bracket. You're like super rich. So we would do 50 times 55, and then we would do 50 times 42. Oops. Should probably do equals. And this time you would owe $130 in taxes. So a little bit more, but you're still left with a whopping $520. So you made $650, but you're only taxed at 20%, so you still, you're still with a lot of, you're still left with a lot of money. You're still left with 80% of your money. In this case, you're left with 85% of your money. Now let's make it a little bit bigger, just so you guys can understand. on a small basis and on a large basis. So let's make it 100 this time, just so you guys can see. And this is taxed for all money, like all capital gains is supposed to be filed. So even if you only purchased one stock and sold it for after 1 year, you're supposed to file it. But if you're in like the 0% or 15% tax bracket, you're obviously not going to pay anything, so you shouldn't worry about that. Now, I changed it to 100 shares just to make it a little bit more simple, and now you can see that you owe $75 in taxes here. I think I did something wrong. 42. Yeah, there we go. Okay. So your net gain is $1,300. You owe $195 in taxes for most people, since most people are in the 15% tax bracket for long-term investing. And the more the wealthier people are going to pay 20%, which is $260. So now that we have that all understood, there's obviously like fast ways to do this. There's calculators on the on Google. Just type in capital gains tax calculator on Google if you want, or you can just make your own Excel spreadsheet. You can just copy this. Hopefully you guys understand. If you don't, leave a comment below. But until next time.